Happy Sunday, welcome back to the channel. It's that time of the week where we go over the watch list, see what I'm looking at, and maybe you can get some ideas and build your own trade theses. So you can see on the watch list, it's actually relatively quiet going into this week. We've got euro dollar, pound yen, Australian US dollar, we've got gold, and finally dollar yen. So what we'll do is we'll start off by looking at the COT filings reports. So we can see overall the ZAR is actually the most bought currency at the moment, with the Canadian dollar being the most shorted. However, this is a more of a long-term outlook. So what we want to do really is zoom in and focus on what's going on right now. Well, interestingly, we can see the US dollar here has had an increase of long contracts and a small increase of short contracts. Overall, I'm still relatively bullish on the US dollar short term. Now on the pound, we can see a huge decrease here of long contracts and an increase of short contracts. So we now want to be looking towards shorting the pound. Now, this will be interesting to a lot of traders actually, because all eyes have been on gold. So we can see that gold long contracts have been decreased, short contracts have been heavily increased. So is that a sign now we need to start looking to short gold? Possibly. We'll have a look into that later in this video. The euro, similar thing here. We've had a very small increase on long contracts relative to the huge increase here on short contracts. And finally, we'll look at the yen here, where we can see long contracts have been dramatically decreased by 14,000 and long contracts have been massively increased here by 23,000. So this gives us an overview of what smart money is really doing behind the scenes. Obviously, the COT data is a lagging indicator. We always get the previous week's reports. However, it's still something we can base our trades around and use as sort of a small advantage in our favor. Now, just before we go into the video even further, I want to show you this, which is the central bank probability. So this is using Prime Market Terminal. The previous software was A1 Trading. Just before we move on, actually, if you want 45% off the Edge Finder, you can go to the code in the description, which is Elite. They currently have a Black Friday offer on. So what we can see here is the Fed, so the Federal Reserve, has a 99% probability of a 25 basis point cut and a 1% chance of a hold. So it seems more like the hold, isn't really going to happen. We don't also have a 50 basis point cut on the cards, really. So it seems like 25 basis points is already priced in. It's kind of expected. So we'll have to see what happens this month with the FOMC meeting. Similar thing here with the European Central Bank. We also have them cutting down to 3%, 92 probability. And you can see this pattern within all of the central banks except the Bank of Japan and the Bank of Australia. So Bank of Japan is actually expected to hike in December. So they've just held their rates previously. I think it was last month. So that was, relatively neutral as expected. And then now we're looking for a hike within the Bank of Japan. And with the Bank of Australia, we are again expecting a hold. This is for this month, actually, in 2 days. So use that to your advantage, and then you can see the overall shift here is an eventual cutting by the Bank of Australia, but nothing too dramatic. We have the Swiss National Bank here also cutting along with the Bank of New Zealand. So now we've got that information out of the way. We have our baseline for what trades we want to look at, which you can see here on my watch list. So euro dollar, I was actually watching this one on Friday and I called it on stream. I was live on Trading Extreme and I said, I would take it here if I can see the reaction. Yeah, I'm not sure. I'm tempted to go for just a very aggressive move here and just play it, see what happens. Or, in my book, the economics are still to the downside, the trend's still to the downside. This is just a healthy pullback. So the problem is I just missed the trade. I'll be completely honest. You can see on this H1 time frame here, we had this, really strong bullish candle here. This was off really poor NFP numbers. NFP came out at 12K, which is very, very poor. Unemployment stayed the same. However, the dollar maintains its strength. We can move on to the dollar in a moment. However, I just wasn't able to catch this entry, unfortunately. However, the bias for me still remains to the short side. There's a lot of retail currently long on euro dollar. You can see this very typical trend line drawn here. You'll see this all over social media, people buying the euro dollar here, and granted, they will have made money. However, I don't see this as being sustained. Again, the bias to euro dollar is still to the short side. We can see the reaction here from this previous level of structure. We've had a very simple break, retest, and also a retest of this 200 daily moving average, and then a really strong shift to the downside. And I expect this to continue. Depending on how the market's open and how the market moves on Monday, we will either have to try and get in aggressively with a very tight stop just above the previous high. Something like this. First target is at 1.06, or if we can get some type of retracement back into this level, that would be perfect. And then we can get a slightly higher entry and increase our risk reward with the same target. So the thesis behind this is the euro area growth is still challenged by high inflation, weak consumer demand, and tepid growth in major economies like Germany and Italy. With the ECB expected to cut rates starting in December, the euro is likely to face downward pressure against the USD, especially as the Fed is expected to maintain relatively stable path in the short term. Additionally, the easing consumer confidence in the eurozone could further weaken the currency against stronger US dollars, supported by robust GDP growth and employment figures. Now, the employment figures, that's a little bit of a rocky one. Obviously, like I said, we had a very, very poor NFP. However, overall, if we go in here and have a look at the dollar index, we can see the general flow of the labor market is relatively strong. We had before we had this 12K here, we had a really strong NFP. Now, this may have just been a one-off. I'm completely happy to say that, but we do still have that as a factor. And currently the idea really is that this NFP is going to be revised next month. So again, we'll have to see. No one really knows for sure right now. Unemployment also stayed the same. We had PCE, JOLTS, consumer confidence. We've had a lot of data coming out for the US that was relatively positive, and you can see the reaction on Friday after we had NFP was actually to the upside. So the sentiment for the dollar is still strong, and we are heading into elections, which is shown to be a relatively bullish factor for the dollar in the short term again. So moving on, pound yen. Now this will be a little bit of a surprise to some people because I've been going on about possibly going long on pound yen and expecting a full correction. However, I am now starting to shift my bias actually to going short on pound yen. So something along these lines back down to the previous lows. So the reason for this trade, the British pound is facing headwinds due to front-loaded fiscal spending and weaker labour market data, making the Bank of England more likely to delay rate cuts. Meanwhile, the yen, though weaker overall, is supported by positive developments in wage growth and rebounded exports. This provides a unique opportunity to short the GBP versus the yen, particularly as economic uncertainties in the UK combined with delayed rate cuts make the pound more vulnerable. Now, again, if we just pull up the COT report, although we do have the yen with a huge increase in short contracts, we also have the pound here with a decrease in long contracts, a very small increase here in short contracts. So possibly the long position isn't quite valid right now. So we'll have to watch the developments on pound yen and maybe we can get slightly higher entry. And again, the target will stay the same at the previous lows down here, to possibly go short on pound yen as we see more data come in to possibly support this trade. However, right now on market open, it's not something I'm looking to short straight away. It's more just waiting to see if we can get that opportunity to go into a short position. Now, if we also look here again at this central bank probability, we have the Bank of Japan expected to hike in December. We have the Bank of England looking to cut. So again, we have that central bank divergence that you guys will always hear me talking about. Now, the Australian US dollar is very similar to the euro dollar trade I showed you earlier, where we've got this supporting trend line to the upside. And I said there's more than likely a lot of retail traders buying at this point. Now, maybe I fall into that same category and I'll get liquidated on this trade. However, in my eyes, the trade idea is actually very solid. The Australian dollar has seen positive momentum from rising inflation, increased exports to China. Market expectations for the RBA to tighten policy in the early 2025 could provide upward support to the Australian dollar. On the other hand, USD faces potential easing of inflationary pressures and a series of Fed rate cuts starting in November 2024. This combination of tighter monetary policy in Australia versus easing in the US could create a favorable setup for the Australian US dollar in long position. This is mainly trading the central banks rather than trading anything else like labor markets and technicals and things. We just find a very simple technical setup here. So we'll have to see how the data from the Australia sort of comes out and develops from here to obviously then say we've got more signals from the Australian bank to say, what are they going to do? What is their next move? However, as it stands right now, this trade does have some potential, and we obviously have a lot of room to really go and correct this downward pressure that we've seen recently. Although we are technically buying a falling knife here. So again, we do take caution as it's a counter trend trade. We normally trade with the trend. Now, gold is an interesting one because we saw earlier that the COT actually shows a lot of increase in selling pressure on gold. So that's a sign that we maybe don't want to start buying gold. I mean, it's a given gold is very expensive. We have come up a huge amount this year. It's had a crazy run. So we really don't want to be buying all-time highs. Although the research is solid here. So global uncertainty such as US elections and Middle Eastern conflicts are strong catalysts for increased demand for safe haven assets like gold. In addition, strong central bank purchases have continued to support the price of gold. Given the current economic and geopolitical landscape, holding a long position in gold could benefit the upward momentum driven by heightened global risk aversion. So as it said, we've still got the conflicts in the Middle East. We've still got the elections coming. They're coming this week. So, that might be a catalyst to say, okay, we're not going to be buying gold as heavily. So that's one sort of risk in gold that's decreased a little bit. So over the next 2 to 3 months into 2025, I do remain bullish on gold. However, if we can see the COT data start reporting more selling pressure and we start seeing the election sort of sentiment start to cool off, and if let's say Trump does get elected, there's that sort of I want to call it a facade, but it's not a facade. I don't know what the correct word is here, but Trump seems to always say, this wouldn't have happened if I was in power, so such as Ukraine and Russia, or this wouldn't have happened, or X wouldn't have happened if I was in power. He's got this presence of safety. So, for example, if he gets put into power, there might be a more of a sentiment that Donald Trump may correct some of the issues within the Middle East, thus reducing some of that risk aversion demand that we have seen on gold this year. So it's something to definitely keep your eye on. Again, I'm not going to go and start shorting gold right now, but it's something that you can keep your eye on. It's definitely got that potential to maybe catch that move to the downside that everyone's been waiting for. Now, finally, we've got the dollar yen. Despite Japan's efforts to normalize interest rates, the pace of rate hikes lags behind other major economies. The US dollar, supported by solid economic growth and stable labor market, is expected to strengthen against the yen, with Japan's ongoing struggle to achieve higher inflation and the lagging rate normalization. USD JPY could see further upside potential. Now again, I'm just going to pull up the COT data one more time just so you visualize the point really. So again, we've got the yen here, negative 14,000 on the long contracts and plus 23,000 on short contracts. Now if we look at the USD, we've got 1,700 in long contracts and 900 in short contracts. So they are still selling the dollar, however they're buying more of the dollar, if that makes sense. So COT and the reasoning for the trade do seem promising. So I actually wouldn't mind going in for an aggressive entry right here where we are, possibly on Monday. Again, wait for the market to open and let it digest and do what it needs to do overnight. And then on Monday morning, or maybe even Monday later in the day, we can start looking to buy this market and ride it further to the upside, looking for this full correction here. This would also be a nice hedge for our pound yen trade. If we do get into that to the short side, we could sort of buy and sell the yen at the same time to protect our capital and let the winner run. Again, relatively small watch list this week, but we do have some promising trades here, so keep your eyes out. If you want to join our signals, links in the description, and like and subscribe. I'll see you very soon. Thank you for watching.